What's happening, YouTube? It's Lamont, Tyson in the building, bringing you another Life Gains financial video to help you guys make those life gains in your finances. Today, I'm going to cover tax section 179 and how you can take advantage of depreciation so that you can reduce your tax bill and further expand and grow your business. If you're finding me for the first time, please subscribe to the channel. Be sure to join me on Instagram and DM me when you have questions about business and finance and some of the things I've done. I want you guys to remember I own real estate, I own a whole lot of stocks, and I got started because I started a respiratory therapy business some years ago as an independent contractor. Then I branched out, started the company on my own, and wound up hiring a bunch of therapists, and I started investing in real estate. And one of the things you learn in business is that taxes can be a double whammy on your head, if you know what I'm saying. Number one, when you're young, you don't know that you need to be taking care of the taxes, so you might get stuck not paying taxes for a couple of years. And when the tax man get on that ass, it ain't nothing else that can throw you in jail other than child support when it comes to money and taxes. Next thing is there are a lot of things that if you don't have a CPA, I highly recommend that you sit down with a CPA. Don't just take my advice, but sit down with a CPA and discuss these things, because a CPA in your business can become your best friend. But what is tax section 179?
What is the Section 179 tax deduction? Simply put, Section 179 allows businesses who pay cash, finance, or lease equipment to deduct all or part of the purchase price of qualifying equipment during the tax year. Typically, when your business acquires equipment, tax deductions are realized over the useful life of the equipment. Unlike other methods of depreciation, Section 179 helps to accelerate tax deductions, allowing your business to benefit immediately. This incentive encourages small business owners to buy equipment and invest in their businesses. So how does Section 179 work? When you purchase a qualifying piece of equipment, it is typically written off a little at a time through depreciation. For example, let's say you buy a truck with a useful life of 5 years for $50,000. Through other methods of depreciation, you would write off a portion of the purchase price annually, spreading your tax benefit in smaller increments over 5 years. While deducting a little at a time can be beneficial, many businesses would prefer to receive their full tax benefit up front. Now, let's say you obtain that same $50,000 truck, but this time you use the Section 179 deduction. With Section 179, you are able to deduct the entire purchase price of the equipment in the year you purchased it, significantly reducing the total cost of equipment to you. Section 179 helps small businesses reduce tax liability, improve cash flow, and stay competitive. So, you might be wondering how a business qualifies for Section 179. Businesses that purchase eligible new or used equipment during the tax year qualify. Each year, the government sets a deduction limit and the spending cap for equipment. Once this limit has been reached, the deduction decreases on a dollar-for-dollar basis until you reach the limit. You can also take advantage of bonus depreciation for certain types of equipment above the Section 179 threshold, which helps reduce your tax burden further. What kind of equipment qualifies for deduction? New or used equipment, purchased for business use, qualifies for the deduction. Everything from heavy-duty equipment to business vehicles to office furniture, computers, and off-the-shelf software is eligible. Keep in mind the equipment must be used for business more than 50% of the time. So, to recap, taking advantage of tax deductions for the depreciation of your equipment can benefit your business financially. And while most methods of depreciation allow you to deduct a portion of the equipment's purchase price throughout its useful life, Section 179 allows you to deduct the full purchase price of the vehicle for the year the equipment is purchased, driving the cost of your equipment down.
That is basically where you get to take up to $100,000 in depreciation a year for equipment. Equipment can be anything. It can be gym equipment. It can be a car. One of the things a lot of guys do is they buy trucks every year to reduce their tax burdens. And so what do I mean by depreciation? Let's say you're done with all your taxes, and what you're seeing on your tax bill is you're going to owe the government about $100 grand, but you didn't buy any new equipment. That's why you see these dudes riding around in these big trucks, because they get to take advantage of this thing. So they get these trucks that are close to $100 grand. Let's say they get an $80,000 truck, and you get to depreciate up to $100K of that. the same year. So if you owe $100K in taxes and you got an $80,000 truck, you get to depreciate that, which effectively brings that tax bill down from $100K to $20K. And what I've done is I have a Tesla. And so I use that for my business. So not only did I get that, but you also get something called double depreciation on that thing. And then you get those EV credits that I got, which can effectively, if you want to get the highest model Tesla, you can get the whole 100K this year and put it on your taxes and file it for next year. That's why if you guys are familiar with folks doing business, a lot of people wait until maybe like December, November. They'll go through and see what their revenues and profits are with their CPA and then determine if they need to go buy some heavy piece of equipment that can help them better their business. Now, I'm not telling you guys to just go run out there, buy a damn luxury car just to say you got it. If you're going to get a luxury car, make sure that it's going to support something for your business. Maybe you are a YouTuber, or maybe you do want to get an EV and you know they're pretty expensive and you do a lot of driving and you're tired of paying that gas bill and you've heard how these EVs can save you money. You do something like that. So ladies and gentlemen, at the end of the day, knowing these different things in your tax strategy is business strategy. And oftentimes people stumble upon these things because they don't know when they're getting into business that this is something you have to worry about. But I'm here to tell you, a good CPA is going to be your best friend in business. Go talk to them, sit down and ask them all the ways you can take your money that you make from your business to support your business and help it grow, and how you can negate some of your tax burden by doing things like taking advantage of Section 179. If you guys have more business questions or comments you want to leave me, drop them in the video. Be sure to hit me on IG if you want to talk with me one-on-one. And that's going to do it for this video. Don't forget to like the video, comment, subscribe, get yourself that life game. Till that next sexy as hell video. I'll see you.